Managing Director of the IMF, Kristalina Georgieva. Thank you for joining us today.
My pleasure.
Always a pleasure to see you, and welcome back to Dubai.
I come here with great interest. What is on people's minds? In a world that is more fragmented, this is a place for dialogue, and I really praise the United Arab Emirates for giving us that platform.
Amazing. Speaking of fragmentation, Managing Director, I think with the rising tensions globally, US, China, US, Europe, and the emergence of a new economic and trade agreements, what's your take on what's happening and how you believe those dynamics would probably impact the global economy, especially that the global economy so far did show resilience?
We do live in a world that is changing very rapidly, and it is changing under multiple forces in play: geopolitics, technology, demography, climate. All of them are driving countries, regions, communities to define what is best for them, how to shape their own future. We also are quite impressed by the resilience of the world economy, as you just noted. So we looked under the hood why the world has proven to be so able to sustain and actually take advantage in some cases of these forces of transformation. Three factors. One, over the last decades, governments moved out of direct engagement in economic activity, let the private sector in. Well, private sector is more agile, more adaptable. In a fast-changing world, it is also fast to respond. Second reason, we have seen in the beginning of the year the United States moving into tariffs almost across the board to all countries. And at that point, there was concern that tariffs may derail global growth. This didn't happen. And it didn't happen for two reasons. One, the United States itself has gone down vis-a-vis the originally announced tariff levels. Most importantly, the rest of the world, and let's remember, the rest of the world is 84% of global trade, decided not to take this route so far. And we are urging our members, stay this course. Not only that, but we see countries reaching out to form more trade alliances, and we are here in GCC. Regions like the Gulf Cooperation Council are saying, wait a minute, we can trade more with each other. So is the case in ASEAN. And the third reason is that there is enormous excitement about artificial intelligence. It is a major driver of investment activity. All those three together have given an impulse to the global economy. We just upgraded our projections for 2026 and 2027, 0.2% up. Now we say this year we are going to grow 3.3%. Next year, just about the same, 3.2. Most important than the overall correction is that we have upgraded almost everybody. We have upgraded the United States, we have upgraded the Gulf countries, the Eurozone, China, India. In other words, it is not a phenomenon that is driven by one particular part of the world. It is driven by these three factors acting everywhere.
MD, the three reasons you mentioned are three major changes, very solid. In your mind, this is a full reset of the global economic system as we know it, or just an adjustment?
Well, it is more of a significant course correction than a full reset, because we are still based on the fundamentals that have worked for us. And what are they? Markets, governments that set the expectations of businesses and the ability of businesses to follow opportunities without barriers. These fundamentals, macro financial stability and competition driving investment allocation, they continue to be in place. What is changing is a world that had a more defined center of setting directions is now more multipolar. And we see in different parts of the world the emergence of new voices, new sources of strength, and more interface across these new drivers of growth and economic prosperity.
And this will lead to my next question. Do you think that the dollar dominance is fading?
I don't think we should rush to that kind of conclusion because of some short-term variations on the currency markets. When you look at the dollar, why is the dollar so important for the world economy? Because the United States has deep and liquid capital markets, and because the U.S. economy is vibrant, private sector driven. Actually, when I talk about upgrades for this year, one of our largest upgrades was for the United States.
And that is because?
Because of the incredibly strong investment appetite for artificial intelligence and because of the high risk appetite overall of U.S. investors. When I look at U.S., I see dynamism that allows adjustment to change much more rapidly than in many other parts of the world. And again, deep and liquid capital markets. What does that translate into? It translates into efficient allocation of capital, labor, financial resources.
Speaking of AI and technology, as you mentioned, you're not worried about a bubble in AI sector, right?
We actually were among the first to signal that we have to be cautious because the investment in AI is driven by expectation for productivity gain. So far, companies in AI are profitable, and this is why investment continues to go up. But if the high bet for very significant increase in productivity doesn't materialize, we may have a pull out of AI, and that can create risk for financial stability. Let me say this. At the fund, we have assessed the likely range of impact of AI on global growth. We concluded that it could be between 0.1 and 0.8%. This is a very big difference. If it is 0.8%, this means we are lifting up global growth above the pre-COVID level. If it is 0.1, it's a negligible impact. So we are on the view that is more likely to be on the higher end, that there will be productivity gain, but it still has to happen on scale. Let me say this, we are looking into the labor markets, because one thing that we are aware is that AI is going to hit labor markets with a significant force. It's like a tsunami hitting the labor markets. Globally, some 40% of jobs are going to be either upgraded or eliminated. In rich countries, 60%. Now, when we talk about the promise of AI, if that change in labor market happens without countries being ready for it, that could lead to social disruptors. And that can also cause some cooling off of enthusiasm about AI.
And that's why IMF released the AI readiness indicator,
This is why we did it. And we are telling countries, pay attention where you are, because it is moving so rapidly. A day you miss to pay attention is a day you would regret.
Changing gears, let me put it that way. The region here, the economic forecast has been revised upwards, but risks remain. Which ones you keep close eye on?
In this region, I want to praise policymakers for having done an excellent job over the last years. In the GCC countries, we have been calling for diversification away from hydrocarbon industries. They have done it. In UAE, 80% of the economy is now non-hydrocarbon. In Saudi Arabia, 60%. So a lot has been done, not just to diversify the economy, but also to diversify against risks. In this part of the world, what happens in oil markets is significant. Now we can say that countries here are buffered against potential shocks. A drop in oil price is not going to be a major crisis factor. What are people here mostly concerned about, and we are of course also watching it carefully, geopolitical turbulence, because that is where there could be sudden changes with potential impact on countries. What can they do? Well, work on very strong fundamentals, so whatever is to happen, whatever shock is to happen, countries can absorb it and work together.
Speaking of economic diversification that the IMF has always been advocating, I would like to understand your view on the number announced by the United Arab Emirates recently, $1 trillion of non-oil trade.
It is great. I think that the efforts that has been put into making the long-term investments for diversification, investment in education, skills development in this part of the world is very impressive. Investment in easing doing business in this part of the world. In UAE, the government has removed barriers to private investments in a very impressive manner. Reduction of bureaucracy. The call for zero bureaucracy in UAE is one that we advocate other countries to follow. Actually, we have adopted a message to our members to do regularly house cleaning of their rules and regulations to open up space for more dynamism. And I think what is very impressive over the last years is the recognition that alliances within the region and across with other regions make a difference. They make you more resilient in a more fragmented world.
Amazing. To Egypt, I think Egypt is waiting for the executive board, the IMF executive board, to decide on releasing the $2.3 billion. Are you confident they will get it?
I'm very confident because I have seen the seriousness with which the Egyptian government has taken on board the objectives of the program, how much they have achieved. Some of the actions taken were not at all easy. We are now in a final stage of completing our review, and I am very confident we will be going to the board by the end of next month.
What is the
by the end of this month. We are already in February.
What is the breakdown of those numbers?
We will have provided, of course, provided that the board approves a proposal, we would disburse $2 billion against the commitments that have been made under the EFF, and we would disburse close to $300 million under the Resilience and Sustainability Facility. And I think, aside of the money, I am very happy that once we do it, that would send a signal that Egypt takes on commitments and acts upon them.
Mm-hmm. Amazing. Are you considering any financial arrangement with Egypt going forward?
Well, at this point, we want to see successful implementation of this program. provided that Egypt does well, we will of course consider a further engagement. It doesn't have to be always a financial arrangement. If the economy does well, if there is no need because of balance of payment shortage for fund financing, we can still have an arrangement with Egypt to support their policies. Because one thing we hear from many countries is that the fund brings much needed discipline. And then we set targets that require focus of authorities. And in a world where clearly private sector drives growth, helping countries to have excellent conditions for private sector-led growth is essential.
What do you think of the debt levels now? Does it worry you?
Globally, debt has gone up, and yes, that worries us. We see debt reaching 100% of GDP in a short while. It is high debt in many advanced economies. It is high debt in some vulnerable middle-income countries, and it is particularly troubling when it is high debt in low-income countries. We are calling on our members to put in place medium-term fiscal frameworks that show that debt is going to go down over time. We are not asking for reducing debt abruptly. We know that this can be very disruptive for economies, but we are asking for clear path for debt reduction. And why we are asking for that? Well, first, because debt service costs are high. So money that can go to invest in skills for the AI economy, they go into debt service. And two, because when there is a reduction in that burden, that allows breathing space, it allows to build buffers for the shocks to come. And one thing I can tell you, I don't know what it would be, more shocks will be hitting us, and we have to be ready.
Of course. Let's talk about the rising star on the global stage, Syria. What's new regarding the IMF engagement with Syria?
We have immediately increased our focus on Syria once there was an opportunity to engage with the new government. I met with the president, our team went to Damascus. At this point, we are concentrating on one institution, the central bank, and then we are looking into fiscal capacity and how revenue collection, expenditure management can be improved. I think that, of course, we all know that the potential of Syria is very high. To reach this potential, it is paramount to have institutions that function well and policies that define a pathway for the economy to come up. I was invited to go to Damascus, and I'll tell you, nothing would give me greater pleasure to have the conditions to see institutional improvements that would make it a call for me to go.
Are you optimistic? What's the main highlights from your meeting with the president?
A very clear understanding that first and foremost the country needs skills and institutions. The conversation was about how depleted Syria is from basic skills to run a country, and how important the fund is to help Syria regain the capacity to govern.
Managing Director, thank you very much for joining us.
Thank you.